The date is March 16th, 2008, and Bear Stearns has just been sold to JP Morgan, resulting in a man named Joe Lewis losing around $1 billion he had invested just months prior to the bank's tragic demise. Joe Lewis wasn't born into wealth. Far from it. His story begins in post-war London, a city still finding its feet after years of devastation. Raised in a modest family, Joe's path to fortune started in a way that no one could have predicted. His father owned Tavistock Banqueting, a small but respected catering business. Young Joe worked tirelessly in the family business, watching, learning, and most importantly, thinking bigger. He wasn't the kind of man to be content with serving meals to the wealthy. He wanted to be one of them. Then, in the 1970s, an opportunity came knocking. The British economy was shifting, and Joe saw something others didn't. He sold the catering business and threw himself into foreign exchange trading. It was a world of high risks, high rewards, and it suited him perfectly. By the 1980s, Joe was a different man. He had moved to the Bahamas, where he operated in relative secrecy, making massive bets on the currency markets. His big break came in 1992, when he joined forces with George Soros to bet against the British pound. When the dust settled, the pound had collapsed, and Lewis walked away with hundreds of millions of dollars. From that moment, Joe Lewis wasn't just rich, he was a force to be reckoned with. He diversified, investing in real estate, sports, and global markets. By the early 2000s, he was a billionaire, living the kind of life few could imagine. But even the sharpest investors can make a misstep. 2007, Joe Lewis made a bet that would haunt him forever. The mid-2000s were a golden era for Wall Street. Banks were raking in billions, real estate was booming, and Bear Stearns, it was riding high. Bear Stearns wasn't just any investment bank, it was a legend. Founded in 1923, it had survived the Great Depression and countless market crashes. And for years, it had been at the forefront of a new financial revolution, mortgage-backed securities. To the outside world, Bear Stearns looked unstoppable. But to those paying attention, the cracks were already forming. The mortgage market was overheated. Banks were lending to people who had no way to pay them back. And Bear Stearns was right in the middle of it. Joe Lewis, however, saw something else. To him, Bear Stearns was undervalued. The panic in the market was temporary. Between September and December 2007, he made his move. He bought up a staggering 9.4% stake in Bear Stearns. His total investment? Over $1.1 billion. For Lewis, this was just another calculated risk. But this time, the game was rigged against him. Early 2008, the financial world was on edge. The subprime mortgage crisis was spreading like wildfire. Hedge funds were collapsing. Banks were starting to panic. Then came the whispers. Bear Stearns was in trouble. Investors began pulling their money. The stock price started to fall, but Lewis wasn't worried. He doubled down, confident the market was overreacting. But behind the scenes, the situation was far worse than anyone realized. Bear Stearns wasn't just struggling, it was drowning. Its mortgage-backed assets were toxic, and no one wanted to touch them. By March 2008, the game was up. Bear Stearns was running out of cash, and then the unthinkable happened. March 14th, 2008, a day that would most certainly go down in financial history. Bear Stearns executives made a chilling admission. They were out of money. The bank was on the verge of collapse, and without immediate help, it would be gone by Monday. The Federal Reserve scrambled to contain the crisis. They brokered a desperate deal. JP Morgan would buy Bear Stearns for just $2 per share. Joe Lewis was stunned. Just months earlier, he had bought shares at over $100 each. Now, they were worth less than a cup of coffee. The billionaire investor had just lost over $1 billion. And the worst part? The collapse of Bear Stearns was only the beginning of this nightmare scenario. Wall Street was in chaos. Investors scrambled, markets plunged, and the financial world braced for impact. Joe Lewis, once a master of the markets, had just suffered the biggest loss of his career. His bold bet had evaporated overnight. But unlike many others, Lewis had the means to survive. His fortune, spread across industries and continents, softened the blow. He licked his wounds and moved on, continuing to invest, rebuild, and thrive. Yet, the damage was done. His reputation took a hit. The man who had once outmaneuvered the British government had been caught on the wrong side of history, and the dominoes were still falling. 6 months later, another giant would collapse, Lehman Brothers, and this time, the entire global economy would be dragged down with it. Hey, if you're enjoying the story so far and would like to support the channel, visit dudedivision.com and use code LOSTCHRONICLES for 15% off your first order. Now let's get back to the story. Joe Lewis's story is more than just the tale of a bad investment. It's a cautionary tale about the dangers of hubris, the unpredictability of markets, and the fragility of even the mightiest institutions. Bear Stearns wasn't the first bank to fall, and it won't be the last. The financial world is built on confidence. The moment that confidence wavers, everything can come crashing down. But what about Joe Lewis? Did he learn his lesson? In the years that followed, he remained active in the investment world. He turned his attention to real estate, technology, and global markets. He diversified even further, ensuring that no single bet could take him down again. Today, Joe Lewis is still a billionaire. He's still investing, still taking risks, but the scars of 2008 remain. And the lesson, no matter how much money you have, no matter how smart you think you are, the market always has the final word. And so, the financial world moved on. Lessons were learned, but history has a way of repeating itself. As long as greed and ambition exist, there will always be another bet and another fall. Trade wisely, my dudes. Well, that's the end of the story, but let us know in the comments what you think. And if you enjoyed the video, don't forget to give the video a like and subscribe for more wild stories.